The funny thing is today is not more the Fed thing. The Fed has its own message, and I'm going to get that to it in a second. What the market is seeing today is that there are certain sectors, such as retail, such as Carnival Cruise Lines, the leisure sector, but really the big message is the emergence of the coronavirus in states such as Texas, more populous states. We are seeing an increase of the coronavirus outbreak in those states. States that had been in the reopening phase, but now are rethinking their strategy to that end. And the market is down over 3%. The S&P is down over 3%, respectively, in those areas because of that. Now, going back to the Fed has made a commitment that they are going to continue doing what they're doing, i.e. the stimulus. The stimulus is going to continue on for Jerome Powell saying, for at least till 2022. That takes away any argument, in my opinion, any argument that this is going to be a V-shaped recovery. This is going to look more like a U-shape, as many of the big houses have said. And we're also seeing that there is a much more slow response. So this stimulus may have to carry over for that long period of time. And we got to be prepared for that. And the market hasn't had an initial reaction to it, but it will figure into, and the market's going to price it into the market in the next couple of days, I should say, that the market is going to retest new lows. Now, this isn't going to be a long-term thing, but for the next 2 to 4 months, we could see we're going to have lows of 1,000 to 1,200 lows if the virus continues in its current trend in the other states. Texas reported a 40% surge in cases. Some of their hospitals are at the brink right now, and Texas is a populous state. There's a lot of people in Texas, just like New York, just like California. So the market overall, this related to the market overall is going to see some retesting of lows, some downturn trends. There are going to be sectors that, I'm just going to say, don't get in there. We're going to get into that. Don't get in there, stay away for now. But later on, why not? Or if you're looking for a bargain and it's a long-term play, absolutely. If you're a long-term investor, I would tell you this. It is a great time to get into certain high-quality stocks, no matter when. But then there are what we call value plays. When the stocks take dips or downward, they go down. You want to get on them because they're really high quality, but you want to do so strategically. So for argument's sake, today, a day like today where the market goes down 1,000 points or plus, you go and you look for bargains. In other words, there was a stock that was $3 or $4 higher or $7 higher this week, and you can pick it up for a bargain. Why not? Go in there, and every single time that the market does that, goes down that 1,000 to 1,200 type point, you go back in, you invest, and you could make some serious money over the long term. Real wealth has been created from these exact type strategies. What's that saying? The beauty is in the eye of the beholder. What you want to look for in a tech, which is a little bit more speculative, So for argument's sake, if we're talking about Amazon, Alibaba, and Microsoft of the world, what if they go down $11? Do you think that company is in big trouble? If there's not a fundamental reason to get away from those types of stocks, I think if you're just looking at the past history of the stocks, if the fundamentals are good, you could see anywhere between 20 and 30% on the upside in an 18-month period. Last year, Microsoft did over 40% in a 12-month period. So there's plenty of opportunities for this to happen with high quality. And I'm really talking about companies that have over 30 billion and over in terms of capitalization. So big companies.